Good afternoon. Good afternoon to one and all present here. I welcome our principal, Sir Dr. S. Anil Kumar, and I welcome our HOD, Dr. Nagaraj sir, who encourages and supports us for all the programs. And I welcome the resource person for the day, Dr. Mahesh KM, sir, for the program. So today we have organized an guest lecture on the topic that is investment accounting from unit 3 of the subject advanced accounting. I welcome my all the students of final year BCom for the guest lecture too. Welcome all of you cordially to the event organized. Now, I would like to introduce our beloved resource person now, Dr. Mahesh KM. Dr. Mahesh KM has been steering the prestigious Jain Evening College, Bengaluru, since 2010 successfully as the principal. He holds MCom, MPhil, PGD HRM, PGD BA, PGD MM, and doctorate degrees. The Dravidian University has conferred on him PhD for the topic Role of Mudra in Financial Inclusion and its Impact on Beneficiaries. Dr. Mahesh KM, Academic Council member, Bangalore City University, is also a member of various statutory bodies. He has also presented papers in seminars, conferences, workshops. He has published more than 13 research papers in peer-reviewed journals and UGC K-list journals. Dr. Mahesh KM is currently pursuing a postdoctoral fellow program in Srinivas University, Mangaluru, under the guidance of Dr. P.S. Altal, Vice Chancellor, Srinivas University. The topic is Mudra loan and its impact on micro, small, and medium enterprise beneficiaries in southern India. So we welcome you, sir, to the event.
Thank you, ma'am. Bharti, ma'am.
Thank you, sir. Thank you, sir.
Thank you very much. First of all, I'll thank the principal, Dr. Anil sir. Namaste, sir, principal sir, and the Nagaraj sir, head of the department, and my good friend Sri Hari sir. Namaste.
Namaste, sir. Namaste, sir. Namaste, sir.
I'll thank the Sri Hari sir giving the opportunity to just to share my experience in teaching subject of accounting and accountancy. Accountancy is a subject which communicate the accounting information. Thank you, Sri sir, for giving opportunity. Namaste once again. I'll thank the institution SSMRV for providing the opportunity, and all my beloved students, dear near students. Thank you for attending this orientation program on Chapter 3 of the Advanced Financial Accounting. Okay, so before we are sharing the screen, sir, sir, you'll share or I'll share the screen.
Yeah, if you want, you will share it, sir, or else if you just tell us that we have to share it, it's ready, sir. It's ready with us. As you like, sir.
I'll share in the window.
Sure, sir. Definitely. Just a minute, sir.
Yes, sir. Yes, sir. Sir, you got it, sir? Sri sir?
Yes, sir. No, it's not visible, sir. No, not yet.
Sir, share, ma'am, Bharti ma'am.
Sir. Sir.
Share ಮಾಡ್ತೀರಾ ಮ್ಯಾಮ್ ನೀವೇ ನಾನು ಯೂಶಲಿ ನನಗೆ ಗೂಗಲ್
Okay.
ಮಾಡ್ತೀವಿ sir. We'll do it, sir.
Just a minute, sir. Sir, we'll do it. Nothing to worry. Okay, sir.
Okay, no problem. By the meantime, we'll just start.
Yeah, you can see the screen, sir. You can see the screen as of now. It has been shared.
Okay.
Is it visible for you, sir?
ಇಲ್ಲ ಬರ್ತಾ ಇಲ್ಲ ಸರ್.
ಸ್ಕ್ರೀನ್ ಬರ್ತಾ ಇದೆ ಸರ್ ನಮಗೆ. Screen is visible for everyone as of now. ಭಾರತಿ ಮೇಡಮ್ ಬರ್ತಿದೆ ಅಲ್ಲ, ಸ್ಕ್ರೀನ್ ಬರ್ತಾ ಇದೆ ಮಹೇಶ್ ಸರ್?
ಹಾ ಸರ್ ಬರ್ತಿದೆ.
ಈಗ ಬರ್ತಿದೆ.
Fine. Okay, so you can continue, sir. Thank you.
Yes. Good afternoon once again, dear students. We are discussing the concept chapter 3 relating to the investment accounting. You know that when there is a investment in entire world, there's a investment opportunities are provided for the individual investors, institutional investors, or by the companies. When you're talking about the investment by FDI, we call it as a foreign direct investment. Just I'm giving the overall the investment concept. Then I'll take up the investment accounting. At present, you know that when India is a hub of unicorn companies, startup companies, they are in the BSE stock exchange, the Bombay Stock Exchange. There is a separate listing is provided for the SMEs. What is SMEs? Small and medium enterprises. Those startups, they're converted into unicorn companies, are converted into startups. That they can raise the funds by issuing their own company shares, or they accept the debentures. Is it audible, sir? Share, sir.
Sir, you're audible, sir.
Yeah.
You're audible.
So there is a separate dedicated platform is provided for the SMEs. We call it as a small, medium enterprises who are there in the all type of sectors. We're talking about the FDIs, foreign direct investments, where the various companies, they are invested in Indian companies. Example, in healthcare, it may be healthcare is another sector, growing sector, where 100% FDI is allowed, investment is allowed. When you're talking about FIs, foreign institutional investors, where the mutual fund companies, insurance companies, multinational insurance companies, mutual fund companies. Why I giving this particular introduction? Because we are talking about the investment. Then we'll come to the second part of the accounting. So investment by FIs, foreign institutional investors, is you know that when they are investing in either any of the companies. So FIs, when you're talking about the individual investor like us, we are called individual investors. Recently, you know that one lot of companies, tech companies, we call as the e-commerce companies, and followed by some of the food products companies. They raise the funds either through, we can say, FPO. What is FPO? FPO stands for follow public offer. The follow public offer is called as a FPO. IPO is an initial public offer, or it may be in the form of a right issues, or it may be in the form of right issues. So this is a scenario which is pertaining to the investment in either by the foreign institutional investors or individual investors may purchase in the stock market. Especially, you know that when India, we have earlier so many in a regional wise stock market, everything is connected. Now we have a prominent 3 stock markets. One we call as the Bombay Stock Exchange, we have a National Stock Exchange and OTCI. But NSE and BSE is a very vibrant. Yesterday when you see that the budget as announced, when started presentation by the Honorable Finance Minister, the stock market is going up. There is a upward moment in the stock market, because the lot of infrastructural importance is given in the budget. So here, why I'm giving this introduction, because the investment opportunity is linked with the for the either through the government or by the companies. They're providing the investment ecosystem for the individual investor, for companies, for a group of companies, or a foreign direct investments, or FDIs. So when we come to the investment of individual or a companies, we have the IPO market. So initial public offer, you already know that one. Some of them you already in the students or in the stock market, where we call as the FPO. So where follow public offer. So you may second time if any company come out with the issue of shares, we call as the follow public offer. Now digital market is there, digital technology is there, various finance young companies are there. They like we have a so many you can download the app, stock market app, and you can start investing in individual shares, one single shares, or you can buy the group of shares. So I'm giving all these information because is a now investment is a one of the a very wide net. It provides a various network. So finance is the lifeblood of business. Without funds, investment is nothing but funds are required. Without funds, we can't expand our business. We can't start your business. You know that one. So some of them you may see the new program that is called Shark Tank of India. Shark Tank India, that these investors they'll invest, either they'll give the equities or they'll give the debt for in return. You've seen that one. Some students who are very much interested in the field of finance and accounting, they'll give the debt and the equity. That debt and equity. So many young companies. India is a very vibrant now. Indian economy is growing up, and you see a lot of startups, either in healthcare or agri-tech, or it may be edutech. We call it as education. Education is called as edutech, where lot of investment opportunities are are giving the new avenues in the terms of enhancing the economic scale. We are talking about today, we are upscaling, the upscaling of the business. Not only startup, once you start up, you have to upscale your business. For upscale the business, what we require the funds. Funds are very, very important. See, we are talking about the after investment. When you come to the after, once you started investment, we are talking about accounting. So what I mean by accounting, there's the two words are there. The first word is called investment, another word is called accounting. I given the brief idea about the investment. The next one is accounting. Accounting means recording the our investments in the form of a ledger book. Now everything is in a fingertip. We are recording through the software. Lot of softwares are available. But even though without these things, softwares, we can't enter. But as a accountant, we should know how to record it, how to enter, even though we are software. So what is accounting? Accounting is nothing but a recording the information or a transaction in books of account. So when you come to the investment accounting is as per the accounting standard 13. So Indian Institute of Chartered Accountancy is one of the prestigious premier institute. They given the lot of accounting standard. So our accounting standard is followed by some of the foreign countries. So where this particular accounting standards deals with AS 13, deals with the investment accounting. So what do you mean by investment? First of all, we'll learn the meaning of investment before we are talking about the investment accounting. So it is as per the AS 13, accounting of investment deals with the accounting for investment in the financial statement. You know that when we have two types of financial statement, I always say to the students, accountancy is so beautiful that we have only two words, two things. You take anything, that is the truth. One is we have, when you come to the financial statement, I already told this theory, sir, that 20 to 30 minutes I'll deal with the theoretical aspect. Without understanding the theory, we can't build the accounting things. So then journal entry, my three category. First, I'll discuss the theory. I'll come to the journal entry. Then we'll discuss about, sir is stressed about more of X and come dividend and interest. That will come to the later on. So here, What I mean by a investment, that after knowing the financial statement, there is two things. One is called income statement, and the another is called as a financial. We have balance sheet, a final financial position. So it consists of balance sheet. Where here investment. What do you mean by investment? Investment is an amount invested in as a capital in some securities of public or a private sector for earning the income. The main intention of any investment is we have to appreciate our investments returns. If we are not interested to appreciate the returns, it is not called investment. It is called as a donation, or it is called as a assistance. If our intention is to enhance our returns, multiply our investments. Multiplying the investment is called as a returns, that we call as the investment. So what do you mean by investment? Investments are the amount which are invested in the capital, invested as a capital, or in some securities with intention of the multiplying our returns. Multiplying our returns is called as investment. Suppose I am not at all interested in multiplying my return. I am basically focused on social work or a corporate social responsibility. This is a part. When you're talking about the appreciation, that we call it as an investment. So always investment is followed by a risk and returns. There are two things. We are always trade off between the risk and the returns. In investment, there will be risk will be there. When the risk is there, returns will be there. Suppose I will invest in a stock market. I take risk. Why I'm giving the idea about stock market? Because you should know before we are dealing with the concept of X interest, that stock market plays a very important role. So their risk and returns is a very, very important one. Risk is enhance the returns. So 1 minute, sir. CRE, sir.
Okay, sir. Okay, sir. Okay, sir. Sure.
Risk and returns. We without taking the risk, there will be no returns. So what do you mean by investments? Investment means investment as a capital in public or a private securities, private security with intention of earning a income, multiplying the income. What do you mean by investment accounting? Now we'll come to the investment accounting. After knowing the investment, another word is investment accounting. When investments are made, then account to be prepared. So when investment is made, account is prepared to find out the position of investment, whether we made profit, whether incurred the loss on this particular investment. That we call as investment accounting. What is investment accounting? Investment accounting, the investments are made, we prepare an account to find out our position, investment position, and to find out the profit or loss from this particular investment, whether we made profit or loss is called as a investment account. So what is investment account? Investment account, investments are made, then the account is prepared to find out the position of the investment and also find out the profit or loss on this investment is called as a investment account. So we discussed the two important parts. One part we called up as the investment. We understand the meaning of investment. Another, we understand the meaning of investment account. What is investment account? So investment account is you can prepare in the form of columnar form. Columnar means there is the 3 column particulars, interest, dividends, and the face value of the these investments, that we call as a columnar. I'll discuss later on the way of preparing the investment accounting. If you are with me, that then we'll discuss all these things. It takes more time, but within the particular time limit, I'll try to as much as my knowledge, I'll complete it. So here, investment accounting, we understand meaning of investment, we understand, and investment accounting, we understand. So types of securities, the types of securities, you already know that one. The investment is made either in the central government securities or a state government securities. We call it as a government bonds. The bonds will be there. Then either it will be a private sectors or a private institutions. There are either we call it as a shares, we call it as a bonds, we call it as a open-ended mutual funds, closed-ended mutual funds. So then either it may be a mortgage security, commercial paper, or it may be a treasury stock. So treasury stock is a form of new type of avenue for the where you can invest. The companies will issue the stock market and they'll buy in the secondary market, and it not carries any dividend. For company's purpose to raise the capital, they'll show it in the stock market. That we call as a commercial stocks, treasury stocks. So we're talking about shares. You already know that one accountancy is so beautiful. The shares also have two types. We call it as the equity shares and the preference share. Now in India, when you see in the from past 20 years, when I am seriously observing the stock market, that some of the companies, they stopped issuing the preference shares. They're issuing only equity shares. The shares, investments in shares, we call it as the equity shares. Then the bonds, we're talking about bonds. What do you mean by bonds? The shares carries the dividends. Very, very important. What here is just so many times when I interacted with him, sir, please come interest and exit this. That's why the dividends is given to the shareholders. What is the dividend? Dividend is a portion of the profit that is given to the shareholders. So where interest is given to the debenture holders or the bond holders. Bonds are, what do you mean by bonds? Bonds are issued by the government companies, where the debentures are issued by the public companies. So both bonds and the debenture carries the interest. So types of investment, when you come to the types of investment, this is only for theoretical thing. What do you mean by investments? Usually the types of investment we call as a fixed investments and the floating investments based on the nature of investment. Basically, we have fixed investment. Why we are talking about this fixed investment? Because these investment made with the sole object of making income out of them in the shape form of interest or a dividend or a both. Why I use the word interest and dividend? You know that one. When an investment in share carries the dividend, and investment interest it carries in case of a debenture and a bonds. So here the object of these investment not to make profit by selling them. Basically these fixed investments, not intention of selling regular frequent selling, but you can sell after the 10 months. After the 10 months there is a provision is made, so we can sell this one after the 10 months. So already Sri sir has already dealt all this concept, but just as a theoretical aspect, as a accounting teacher, just I'll giving the introduction about these things. Then we have another type called floating investments. We call it as a floating investment. What do I mean by floating investments? These investments are made with the sole object of making profit by selling them when the prices are very favorable. That's why stock market plays a very important role here. So this floating investment means, you know that when now because of the lot of upstock, you take it example a tech upstock, people will buy, sell immediately, and they say one share they'll purchase, and you also as a students, you know that when some of them you may downloaded this particular upstock or the other, so many apps are there, stock market apps are there, where you're investing your savings and you are making profit. We call it as a floating investments. So we'll buy and we'll sell, and when there is a price are very favorable, when shares of price are very favorable, this mostly done with the speculation. That you know that when there is a lot of difference between speculation and the gambling, that we are talking about the speculation means intention of making more profit by buying and selling. On these securities get interest and dividends depending upon the bonds. We have a dedicated market, bond market in the Bombay Stock Exchange. We have a debt market, you know that one that. So we have a equity market. So there is a segments are there. So where we will may get interest and dividend, and we may suffer the profit or we incur the loss. We suffer the loss. That's why account is so beautiful. You can see either will make profit or will suffer the loss in case of a speculation. So where you know that one, just as to enhance your knowledge, there are the two important stock market gurus. In India, we call it as a Rakesh Jhunjhunwala. He is a father of stock market guru. stock market guru. Warren Buffett, you know that one as a US stock market guru. In India, you know that one he invested in so many companies. He is there in the both the IPO market and the secondary market and the primary market. Rakesh Jhunjhunwala, he is investing. He is in a richest person in terms of a purchase and sale of shares when it comes to the stock market. So why I'm giving this particular example, because the person name. So you should have the inspiration to buy and sell shares and speculation. And the speculation, it gives a lot of knowledge there, a lot of knowledge. Then we have a cost of investments. So when you purchase and sell the shares, you have to pay the lot of cost. What do you mean by cost? A simple term, a cost means expenses. A cost means expenses. When I'm teaching anytime, I'll go to the basic things, because when I entered an interview, the first question they raised is what are the basic things. So some of the students have raised the hand. Ma'am, Bharti ma'am?
Yes, sir.
They raised the hand, ma'am. Anil sir, namaste sir.
Sir, we will take the questions at the end, sir.
Yes, yes, ma'am. Yes, ma'am. Yes. So our sir is there, Anil sir. We learn the accounting with our Anil sir is a guru of accounting. So, sir, thank you, sir.
Nice to see you, Mr. Professor Mahesh.
Thank you, sir. Thank you, sir.
Yeah, thank you so much for engaging our students.
Sir, my privilege. You have given the opportunity, sir. Thank you very much, sir.
Thank you. Carry on. Thank you.
So when we're talking about the cost means a simple term, expenses. Sir. So when you purchase any investment is done, we have to pay the brokerage charges. Both the buyers and sellers, when you sell, buy, we have to pay the charges. So broker duties and fees we have to pay. The cost of investment includes always when you purchase any shares, it includes these charges. When you purchase any machinery, we transportation charges of this machinery is added to the cost. This is the usual accounting logic. That's why accountancy is called as a logic that. So we'll add, it is not a pure science. It is a science, but it is not a pure science. Accountancy is a science, but not a pure science. So where in chemistry and physics, we'll follow principles that. Here also we'll follow principle. We'll follow the American accounting rules. We follow the English system, where we say the cost, any cost incurred, it should be added to the investment. So be in the form of brokerage, duties and fees. And non-cash consideration in case of investment, partly acquired by issuing shares, by issuing other securities, other assets. So we'll when shares are issued, we purchase at par price. You already know that one, discount or premium. So here the shares may be issued either par, premium, or at a discount. So here when you come to the interest. So always debenture carries interest, bonds carries interest. Interest and dividend and other receivables. Dividends, interest and other receivables are connection with the investments, usually are known as a ROI. In financial management, we call as a return on investment. Same thing. So where we call as a income. So dividend, interest and other receivables, you already know what I mean by a dividend. A dividend is a portion of the profit that is given to the shareholders. Interest is a part of the debentures or a debt bond funds, where interest in case of a bonds or in case of a debenture. This is very, very important thing, my dear students. Please understand, dividends given to the equity shares, you already know that one. So you are in the final year. But anyhow, when you go for the interview, so the questions will be, basic questions will be asked. So please remember, interest will be given to the bonds or a debts, where we call it as a debenture or a bonds. Dividends given to the shareholders. So we have issued most of the company from past 20 years, they issued only equity shares. They stopped issuing the preferences. Yes, sir. Next slide, sir. Srihari, sir. Srihari, sir. Next slide. Yeah. See, we're talking about the long-term investment and the current investments, where in case of a current investment may be called financial statements lower than the cost or the fair value. So long-term investment always be carried financial statement at their cost. This is very, very important. So we discussed about the interest, investment, fair value, that we talked about the par price, discount price at premium price. You already know that these are the basic things where the shares are issued. And when you come to the interest, we already discussed about what I mean by interest. Investment with interest paid at the end of the each year. But mostly investment on such interest will be paid half yearly. So most of the companies, you know that one, banks will close half yearly one day, and for the preparing the financial statement, you know that one. So even interest or dividends will be calculated for half yearly, and it will be paid yearly, but calculated half yearly. Yes, sir. Next slide, sir. When you come to the share, sir. Yes. Sir, ನನಗೆ ಕೊಟ್ಬಿಡಿ. ನಾನೇ. Yes. We're talking about investment, reclassification of investments. Well, this is particularly in Anil Kumar sir book. You can just see that we will deal with the students with this particular advanced accounting by Anil Kumar sir, Mariappa sir, and Rajesh sir. So they given the reclassification of investment, that where the long-term investments are reclassified as a current investment. The transfer is made at a carrying amount at lower than the cost at the date such transfer, and investment are reclassified as current investment and to the long-term investment. So this is only classification, where in case of classification, these investments are classified. The investments are classified depending upon that. We'll discuss when we're discussing about the particularly aspect of preparing the accounts. So investments, but we will focus more on the cum interest and the ex interest and cum dividend and the ex dividend, and we will not deal with the bonus shares, and just touch upon the right issue of shares and bonus shares. I think there is no problems on the right issue of shares and bonus shares. When you're talking about the reclassification of the investments, reclassification of investments from the point of investments reclassification. We have current investment to permanent investment and permanent investment to current investment based on the face value. That's why I've given in a word. Classification is based on reclassification, not given the entire chart. Just where the long-term investment are reclassified as a current investment. So current investment, and the transfer is made at a carrying amount and the lower of the cost of that date. So here a transfer at a lower cost price or a fair value of the date of transfer, and permanent investment to current investment, a transfer at a lower cost price or a carrying amount of the date of transfer. So each word we want to go on discussing, but these are the things you already know that one. So classification, the valuation of, in case of a reclassification of investment, it comes in the valuation. So valuation will be made at a cost or a market value, that we will discuss when you're discussing about the problems that sir, next slide, sir. Just to give idea about the classification. Yes. Now, as per the AS 13 for accounting for investment, you know that one. Just is for the introduction aspect. So applicability AS 13 accounting for investment. AS 13 accounting for investment widely used and deals with accounting for investment in the financial statement prepared by a company and prescribed various disclosure requirements. Just we should know that one. It is the AS 13 is the account. As a commerce student, as accounting student, when you are dealing with the investment accounting, you should know that one. It deals with the AS 13. Suppose you want to go after your 6th semester, 5th semester, you want to go for investment companies. They may, any one particular basic aspect, they may ask which accounting standard it will be recorded. As a student, you know that when it is AS 13 is applicable. Yes, sir. Next slide, sir. That already discussed about mutual funds. Yes. So next slide. Financial, these are not required, sir. Yes. So next, cum interest, will come to the cum interest. And yes, just investment accounting. Yes, sir. Sir. So just investment accounting, it takes more time to prepare the entire chapter. It is 15 marks question will be asked. So where investment accounting is an account opened for the purpose of investment. Further, number of investment is large. A separate account for each investment should be open. You already know that one. When there is a more investments are there in a company by the companies, then each investment account is open. So investment account is, you already know that one. You please understand the basic thing. If you make it accountancy simple, you'll get the dimple in terms of the good marks, my dear students. What is means investment accounting is a type of real account. So real account in nature. What is the rules of real account? Don't forget our fundamental principle of accounting. Even though you are in the 5th semester or a 6th semester, when you're dealing with the accounting, go back to the basic things. So investment account is a real account. When you purchase of investment comes in. So you'll be remember, it will be very easy if you understand the journal entry. You can prepare easily ledger account. Go to the investment account, write cash or bank account. Now we have to say thanks to the Modi, where he is given only accounting to be done through the bank. There's a direct bank transfer. After the GST, everything is a bank. After the Aadhaar linked, everything is transaction through the bank. So investment account debtor to bank account. So investment is a real account. Debit what comes in when you purchase the investment comes in, and cash goes out. Cash goes out means bank. On behalf of us, bank is paying. So bank account is a personal account nature. Bank account is a personal account nature. Debit the receiver, credit the giver. Bank is giving. So investment account debtor to bank account being investment made. So we started investing. When investment is made, the investment comes into the business. So company, we always think from the point of business or a company. Investment comes in. Investment is a real account. Debit what comes in? Debtor's investment account debtor to bank account on behalf of the company. The bank is paying. Bank is a personal account. Debit the receiver, credit the giver. Yes, ma'am. Bharti, ma'am. Yes, ma'am.
Sir.
Doubt is, ma'am. Raise my hand. Okay.
Sir, could be by mistake or something.
Okay, no problem. So when the next part is, once you purchase, you already know that when investment is, we are intention to make profit or loss. We want to do speculation there. And the sale of investment. When the sale of investment, when you sold the investment goes out, it is a real account in nature, the cash comes in. So investment account will be credited with the net realized value of investment. Net realized value, when purchase and sale, the net realizable value should be recorded. So interest and dividend account. So interest and dividend, you know that when interest investment, you earn the interest or a dividend. It may be debenture or it may be equities. So we're talking about when I say investment means, please remember I given here interest and the dividend. So it may investment means in the form of equity and the debentures or bonds. So when the interest and dividend, so interest we earn on the investments, you can write bank account, interest account, and dividend is a profit. Interest is a profit to us. You already know that one. So we prepare income statement, financial. That's why I discuss about financial statements. So dividend is a profit to the company, profit to the investor, where interest is the income to the investor, is a nominal account in nature. Debit all expenses and losses, credit all incomes and gains. We credited with the interest and we recorded in the investment account. When you received cash, the compound entry. So here investment account will be credited in case of interest and dividend accrue, and cash or bank account will be debited in case of net realized value of the investments, net realizable value of the investment. I'm discussing about when you're talking about the investment accounting entries. The first one is purchase, next one is sales, next one is interest. Yes, ma'am. The next slide, ma'am. So investment transaction. This is where Sri has just more, sir, my sir, just to give the idea about the interest. So the sir is already, ma'am is already, or the sir is already discussed. My duty is only as a guest appearance. Just I'll give the idea. Already our sir already dealt this particular concept. Investment transactions. So where in investment transactions, we normally have a following two types of investment transactions in case of these investments. One is called as a cum dividend or a cum interest quotation. cum interest quotation, and another is called as a ex dividend or ex interest quotation. See, you can see that the cum dividend relating to equities, when you're talking about the cum interest, is relating to a debentures or a bonds. So here, cum interest and the ex interest from the point of purchase and sale. Please remember, dear students, these all cum dividend and the cum interest quotations and ex dividend and ex interest quotation relating to purchase and sale. Say
Hello, sir.
Yes, ma'am.
Network wasn't there, I guess, sir. You weren't audible to us. Now you are fine.
Okay, ma'am. So we normally have an investment transaction, the cum dividend, cum interest quotations, and ex dividend or ex interest quotation. So here relating to purchase and the sale. So here, when we are talking about cum interest and purchase and sale, after some date, how very simple terms. I'll not go in detail because one word. I'll make it. What is cum dividend? So cum dividend is a dividend which is just declared is called as a cum dividend. Where it still accrued, it is still decided by the board of directors that we had to give to the dividend to the shareholders or interest to the debenture holders. So we call it as a cum dividend. A cum means it is a Latin word. Please remember, my dear students, why I'm stressing this point, because here, sir, whenever he called, Sir Mahesh sir discuss about the cum and the ex. This is a Latin word. The accounting terms, most of the accounting terms are taken from the Latin, you know that one. Latin word, cum means with inclusive. Please remember, we are talking about in the entire word, today we are talking about inclusive. Inclusive. Cum means inclusive. Ex means exclusive. So cum means with. Exclusive means without. Without is called as a exclusive or ex dividend or ex interest. Cum means inclusive. We call as a inclusive of interest. So where in most of the book, Anil sir book, you may see in that one meaning of a cum interest and the ex interest. Just I'll read out, then I'll simplify it for your understanding purpose. In the books, they given very clearly meaning of cum interest and the ex interest. What I mean by a cum interest and the ex interest? Well, in case of a cum interest and the ex interest, the difference between cum dividend and the ex dividend or ex interest and the cum dividend, the buyers of shares, when they are quoted ex dividend, is not entitled to receive any payment. It is the interval between the record date and the payment date during which stock traded without its dividend. Therefore, the person who owns the security on ex dividend date will be awarded the payment regardless who currently holds the stock. So in very simple word, what do you mean by ex dividend means when a share company has declared and they prepared the list of the shareholders who are eligible for getting the dividends. Eligible for getting the dividends. That list is prepared by the company who are eligible for the dividend is called as a ex dividend or a ex interest, where just company has announced the dividend, where that dividend we call as a cum dividend. In a simple word, to make it very simple term, with is called as a cum, without is called as a ex. The buyer is called as a cum dividend, where in case of ex, the seller has the upper hand. The price is higher, price is lower. Where the price is higher, in a cum dividend, usually the price will be higher. Because when I, as a shareholder, if I hold the share and I hold the share, and they declared the dividend. I sold for emergency purpose the fund. So I am eligible for the dividend. That's why I'll quote. At a price higher. From the point of seller, its price lower. Nothing is payable. So where the shares, a list of shareholders is prepared in case of a X dividend, where in case of a cum dividend, just the company has announced the dividend. That's why it is called cum. Cum means with, X means without. So here, these are the two important words which is taken from the Latin words. When you're talking about these cum dividend and the X interest quotations, there are four values, four things. Please remember as a students. Value of investment at glance, just I'll explain the glance. Cum interest purchase. There are two things because it is in case of a cum interest purchase and sale, the X interest purchase and sale. So X interest purchase, cum interest purchase, cum interest sale, X interest sale. So basically four things. What is meant by cum interest purchase? A purchase price plus purchase expenses. What do you mean by purchase expenses? We discuss about the transaction cost, it's a brokerage, all these things should be added. And the interest for the period from the last declaration up to the date of purchase. That's why I told you the company has already announced the dividend. You know that when dividends will be given in a regular intervals, the 6 months at the end of the accounting year, they'll declare the dividend. So they declare the dividend that we interest for the period from the last declaration to up to the date of purchase. X interest purchase, purchase price plus purchase expenses minus interest neither added nor deducted. We'll discuss in the problem. When you say X interest, in the problem, suppose the interest is not quoted. So usually most of the authors, they think that it should be presume that it is a cum interest. Please, my dear students, if they not mention the interest, most of the authors, they presume when the interest is not made it in the problem, then we have to presume as a cum interest. So when you say cum interest means cum interest purchase or cum interest sales. So there are two things in a problem. They'll give purchase cum interest and cum interest sales. When you're talking about the cum interest purchase, you already know that one. Purchase price plus purchase expenses, that is in the form of brokerage. Simple example, brokerage. And when you say X interest purchase, purchase price plus purchase expenses. When you say cum interest sales, sale price, there will minus the sales expenses. It's minus interest for the period from the last declaration to up to the date of sale. And X interest, similar. In case of sales, that's why I told you, where in case of a X interest, without interest, without dividend, they already declared where the buyer is not eligible there. Buyer is not eligible. Where in case of a cum dividend, in case of a cum dividend, in X interest or X dividend, where who are the hold the shares? If a buyer hold the shares, his name is there in the list of dividend, he is eligible. That we call as a X interest. So he is eligible for that particular dividend. That's why cum interest, they'll charge higher. The seller will charge higher. So here, the cum interest sales and the X interest sales, they're similar to the dividends and the interest. So we just will discuss about one particular concept because already we are reaching 2:30. I'll dictate one simple problem there. One problem is recorded in the question that CRS told. Ma'am, you just share that particular question. Buyer book, you know that one we discussed about the few journal entries. Interest on purchase of investment in the books of buyer. Ma'am, just go through a little bit slide down. Yes, in the seller book, so sale of investment and receipt of dividend and interest. I already explained in simple way that So your compound entry we passed, being investment sold, seller is in the books of seller. Ma'am, just go a little bit down. We already discussed about the theoretical aspect. It is a Latin word where ex dividend and the ex interest quotations, which will be quoted at in the buyer and seller and at the time of transaction. So these interest will be quoted. Nothing is mentioned in the problem. We always take into consideration as a come interest. So always you have to presume as a come interest. I think ma'am and her sir has already explained. If I wrong, please correct me that, madam and Shriyari sir. So if we presume always, sir, if nothing is mentioned in the question, the purchase or sale will be always a come interest or a
X interest, sir. We used to take it as, yeah, EIP. We used to take it as.
We call it as the EIP, X interest. That.
Yes, sir.
So X interest. So here we presume as a X interest, or it may be presumed as a come interest also. But basically, to avoid the dispute in awarding the marks, what's here is sold, it is X interest. Correct, sir?
Sir, yes, sir.
Yes, sir. Little bit down, sir. Okay, sir.
Yes, sir. Yes, sir.
We already discussed about the come interest and the come dividend and the ex dividend. The major difference between given here, the come interest or a dividend price inclusive. I already told it is a Latin word. Come means with. With means inclusive. Where X means exclusive. Very simple word. Please remember, exclusive. Without is called as a ex dividend or ex interest. Purchase price is higher than the normal purchase price. I told you, usually price is higher in case of a come dividend. So where price will be lower in case of a ex dividend or ex interest. Nothing is payable as additional in case of a come interest, where separate account is dividend and interest has been paid in case of a ex dividend and the ex interest. Yes, sir. Next one. That we already discussed. Bonus shares, right issues. Right issues is made for the existing shareholders. Bonus shares, shares for the existing shareholders in the form of extra shares. Extra dividends is given in the form of a shares is called as a bonus shares. Right shares offered to the only existing shareholders, not for the new shareholders. This is for existing. Most of you take into example, Syndicate Bank has issued the right shares for existing shareholders. So where I am one of the shareholder of the Narayan Rudalaya, I am shareholder of the Syndicate Bank. I have the shares. Coffee Day also. So where they issued the example, Syndicate now is merged with the Canara Bank. So they had come out from the long 10 years back. They come out with the right shares. Right shares are offered to the existing shareholders of company as a matter of right. Hence they are called as the right shares. Only existing shareholder, if they're interested, they can buy the right shares. Yes, sir. Next one. Yes, just as the Shriyari sir told, so just stress these aspects. So I've taken here one particular problem just to give idea about this particular X interest and the come interest and the X dividend and the come dividend. I'll not go in detail. Why? Because time is also constrained where the grasping time is very, very important. So here you can just, I also explain with the particular example. So we have to take into consideration the rate also. At the same time, number of months are very, very important. Usually when you take here, we'll exclude the date of purchase. This particular example, I told you, we had to add the purchase price in case of come interest. We added here the cost of debenture. This is a debenture, relating to the debenture. Purchased on 2021, company has issued a 12% fully paid debentures of ₹100 each. Interest being payable half yearly. You know that one. Every 6 months once when you take, our accounting period starts with the April, and in the month of September we'll close, we'll take up to the 8th, then we'll start with the 10th and we'll end up with the March, 31st March. So here, the 13th September and 31st March every accounting year. On 1st December 22, Mr. Bull and Bear purchased 10,000 of these debenture at rupees 101. That is at a premium. You know that when we discuss about par, premium, discount, usually discount is very less premium. Paying the brokerage 1% cum interest amount of purchase. On 1st March 23, the firm sold all these debenture at rupees 106 cum interest price. Again, you know that when we had to pay brokerage, when we purchase and sale, we have to pay the brokerage charges. We call it the transaction cost. The firm sold all these debenture on 106 cum interest price, again paying the brokerage of 1% of cum interest amount. A prepared investment account in the books of Bull and Bear for the period of 1st December to 1st March. So just I taken the, I have the word sheet also, but here only just to working note. The working note only very, very important. The cost of 12% debenture purchase on 112 2022. The cost value, you know that one, 10,000 into 101. You can see that we purchased 10,000 debenture of rupees 101. This is a 12% is the rate of interest. The debenture carries its face value is 100 rupees. You can see the first part of the this one. Issued at 12% is the rate of debenture interest, and the face value of this debenture is 100 rupees. You already know that one. These are the basic things. They purchased 10,000 debentures at 101 at a cum interest. So you already know cum interest. This is the purchase. In purchase, please remember, dear students, two things. It is called cum interest purchase and ex interest purchase. In sales also, it is cum interest sales and ex interest sales. In case of interest and dividends, this is either purchase and sales. Here it is purchase. We will not discuss about the sales. Just then I'll discuss about the second one, sales. So purchase. So here purchase, you can see the value 100 debenture into 101, 10 lakh, 1 lakh, 10 lakh, 10,000. Add brokerage. Brokerage is 1% on this value. We call it as a, you already know that one, purchase price. The purchase price is brokerage 10,100. So here it is cum interest. So when you say cum interest, so in case of cum interest, you already know that one, we have to minus that interest part, so less interest, so less cum interest. So months, very, very important. Their months calculation plays very, very important. So rate of interest, debenture carries 12%. So 2 divided by 12. So minus it, and total value is 1. Then next one, you just see the next question there. This is only working note. Just I'm giving the idea about this particular working note. I already told cum interest purchase, ex interest purchase, cum interest sales and ex interest sales. So we'll add it and minus it. So when you come to the ex interest, we'll minus it. And at the same time, when you're taking about the sales, we are talking about sales. This is purchase. So next one, see here, sir. Bhartima?
Yes, sir.
Yes, sir. Yes, sir.
Just you can see here the another same thing. So working note 2. Working note 2, the same problem. You just see working note 2, where the sale proceeds, it is a sales, and from the point of seller, from the point of purchaser, we worked out the 2 working notes. So when you say the sale proceeds of 12% debentures sold, the previous one, sir, just one second, previous slide, sir. See here, I told you the cum interest purchase and cum interest sales. So cost of 12% debenture purchased. Here, which is purchased, we minus the cum interest. So next slide. So you can see here the sold. So sale proceeds of 12% debenture sold. Sale price, see 110,000 debenture at the rate of 106, and less brokerage, less cum interest. So you can see cum interest for a 5 months. So how we got 5 months? From the year it is end with the September to 31st March. From 1st September, that is 10th, and we have to exclude the March. Please remember, we can't take entire 6 months here. So 5 months, they are only the student. Please remember, we had to take these 5 months here. Why? Because we started with the October to March. So 10, 11, 12, 1st, 2nd, and we purchased on 1st March. When you say 1st March, the firm sold all these debentures. So when we sold all these debentures, 1st March, we exclude. There is a 5 months we calculated come interest. That should be minus. We minus these amount, and the sale proceed for the 12% debenture sold. It is 9,99,400. So we have to do the working note. Just I'm giving the idea that where we require more time, just how to calculate working note, that is come interest and the come interest purchase, X interest purchase. You have to see the question there, and come interest sales and X interest sales. Just one more problem that in the slide only, Shriyari sir, on the slide ಹಾಕ್ಬಿಡಿ.
Okay, sir. Okay, sir.
ಒಂದು ಎಕ್ಸ್ಟ್ರಾ ಸ್ಲೈಡ್ ಹಾಕಿದ್ರೆ ನಾನು ಒಂದು ಬುಕ್ಸ್ ಆಫ್ ಪರ್ಚೇಸರ್, ಎಂಟ್ರೀಸ್ ಇನ್ ದ ಬುಕ್ಸ್ ಆಫ್ ಪರ್ಚೇಸರ್ ಹೇಳ್ಕೊಟ್ಬಿಡ್ತೀನಿ. ಒಂದು ವರ್ಡ್.
Sir, we will stop sharing so that you can start, because you are the co-host as of now. You can just make it.
Yes sir. Thank you sir.
Okay sir.
Sir, ನಾನು ಶೇರ್ ಮಾಡ್ತೀನಿ.
You can do it, sir, now.
Yes, ನಾನು ಮಾಡ್ತೀನಿ. So share ಆಗ್ತಿದೆ ಸರ್.
It's clear, sir. You can make it.
Word document.
Yeah. You can do it. It's clear.
Just ಮಾತಿಗೆ ಹೇಳಿದ ಮೇಲೆ ಅದನ್ನು ಮಾಡಲೇಬೇಕು.
Thank you, sir. Thank you.
Entries in the books of purchaser in case of a X interest purchase. Please, dear students, just purchase. One more concept, just to give idea. I'll take December. Okay. On 1st December, I'll type 1st December 2001. Purchase 206%. Here is sir ಆಗ್ತಾ ಇದೆ 6% debenture of rupees.
Yes sir, it's going. You can
of rupees 100 each at rupees 104 X interest per debenture. He paid 0.5% brokerage. In this connection, just for idea ಕೊಡಕ್ಕೋಸ್ಕರ ಇದು ಮಾಡ್ತಾ ಇದ್ದೀನಿ ಸರ್. ಶ್ರೀಹರಿ ಸರ್.
Sure sir.
Interest is payable on 30th June and 31st December. Each year. So you can I'll just calculate debenture value. So you can see here we purchased 200 debenture. You can see the 200 debenture. 200 debentures into the 104. The value is rupees 20,800. The 20,800. So you can just see the 20,800 is the value. For this, there is a interest on 20 debenture of rupees. We had to calculate the interest factor. So interest always will be, that when we calculated the value brokerage paid, the 0.5% of brokerage is paid. The 0.5% brokerage is paid on 20,000 debenture. Brokerage is paid 20,000 debenture, 0.5%, 1 divided by 2 into 1 by divided by 100. 100 is equal to the brokerage is 100. So here the value will be 20,900. Just this is, that when brokerage paid, it should be added. Brokerage paid should be added. Where the interest, we have to calculate interest. Interest is always be calculated, that when on actual value on 20,000. Months are very, very important. So 20,000 into 20,000 into interest is, this is a 6% debenture divided by 100. A number of months, I told you, it is ends with 6 months, but we are at the end of the date month, correct, Sri sir? Now adana tagonalla, we calculate for the 5 months date of purchase, correct, sir?
Yes, sir. Date of purchase is the 1st of December. So December we are not going to take it. So it will be a 5 months. So July, August, September, October, November, and November.
So this is 5 months. 5 divided by 12. 5 divided by 12. The interest is the 500 rupees. A simple one, just simple. So 20,900. 20,900 plus the 500. 20,500. This is 21,400 is the value being purchased the debenture. So where the amount is minus, the total amount is 20,900 plus 500, 21,400. 21,400 is a being debenture purchase. So debenture purchase at rupees 104 per debenture. We got it the 104, that is 21,400. Now the interest, 6 months interest. The 6 month interest is 6 months interest we had to calculate. That is on 20,000, 6% rate at 6 months, 600. So 600 minus 500, so 100 is the interest we are transferring to profit and loss account. So here the minus 500 marbeku. Why we had to do 500? Because we already calculated the interest part. Interest part we received on debenture. So it is the expenses from the point of buyer. We are recording in the books of buyer. So bank interest on receipt of this particular one, 600 rupees. We got it 600. 500 plus 100, 600. Actual interest to be transferred. Actual interest to be transferred is 100. So 600 minus 500. How we got 600 means? So 20,000 into 6 divided by 100 into 12 months. So 600 rupees. Just we taken one simple one. This is relating to X interest. So amount is 600. So interest to be transferred to profit and loss account is difference. 600 minus 500, 100. This is relating to X interest purchase. In case of cum interest, X interest sales, sorry, this is X interest purchase. X interest sales will minus the amount of whatever we incurred, the amount of brokerage will minus it. In case of a X interest sales, will minus the brokerage there. So X interest sales, the sale price minus sales expenses. But in case of a cum interest purchase, the purchase price plus purchase expenses. There are 4 types of value of investment, 4 types at the glance, just for your understanding purpose. At the glance, I'll make it a little bit clear. Yes, first one is just for understanding. I don't know how much satisfied you people, that students, interest, cum interest, purchase. It should be very clear. The next one is 4 category at the glance. X interest, interest, purchase. First, with this problem, we discuss about the X interest purchase. Another category is already Shreya is told, cum interest, interest sales. Sales will minus the brokerage. Correct, Shreya, sir?
Yes, sir. Yes, sir.
So X interest, this is a glance, X interest, sales. Please remember, this is little bit, to make it simpler, my level of understanding and teaching to the students. At the glance, we have cum interest purchase. That just now we discussed about the X interest purchase. It will be X interest purchase, cum interest purchase, and we have a X interest sales and the X interest cum interest sales and X interest sales. In X interest sales, we will minus the brokerage. Here we'll minus the, in case of sales, sale price minus sales expenses minus interest for the period of declaration to the up to the date of sale. You just see that in case of a X interest also, sales price minus sales expenses. Sales expenses is in the form of brokerage. In case of here, cum interest purchase price plus purchase expenses minus interest period of interest for the period of from the last declaration to up to the date of purchase. Just see purchase price in case of X interest purchase price plus the purchase expenses minus interest added depend separately for the period of last declaration to up to the date of purchase. This is at the glance. This cum interest purchase, X interest, it requires more time to prepare account columnar type. When you keeping the methods of keeping the account, you know that one we can prepare separate interest account and the investment account separately, or we can prepare the columnar investment account. Just I'll discuss about the, when you're talking about the columnar interest account, we will prepare a column for the particulars, nominal value, interest, and the cost that we call as the columnar interest. Investment account, we can prepare at the floating or investment account at the fixed, where in case of fixed, then balance is carry forward. So this is relating to investment account. One problem, just I put it in my PPT. I'll stop this particular share screening. At the glance, I discuss about the stress upon the X interest and the cum interest.
Nice, sir. You are going to present your PPT now?
Yes, sir.
Okay, you are going to present. Fine.
Yes.
Thank you. No, you want me to present or you are going to
ಇಲ್ಲ
present?
ನಾ ಮಾಡ್ತಾ ಶೇರ್ ಆಗ್ತಿದೆ ಸರ್.
Not yet. Nothing.
ಶೇರ್ ಆಗ್ತಿಲ್ವಾ?
ಇಲ್ಲ ಸರ್. Yeah, it's done.
ಶೇರ್ ಸ್ಕ್ರೀನಿಂಗ್ ಬರ್ತೀನಿ ಸರ್.
ಬರ್ತಾ ಇದೆ. Sure. You can scroll it down.
ಸ್ಲೈಡ್ ಶೋ, ಎಸ್ ಸರ್, ಸ್ಲೈಡ್ ಶೋ ಮಾಡಿದ್ದೀನಿ.
Yes, sir. You can scroll it down so that it comes.
Yes, we already discussed all these things. Summary, accounting investment as per AS 13.
Yes, sir. 18th or 19th slide.
Yes. The books of buyer just we discuss. Ex interest we discuss about all these things.
The illustration one is over.
Yeah.
Note
to be prepared.
Yes, sir. That's also over.
At the glance also I explained.
Yeah.
Yes, this is the columnar investment account.
Correct.
In case of columnar investment account, just I given the just information. So this in the books of bull and bear investment account for the columnar part, the date, particulars, nominal value, interest, cost value, and both debit side and the credit side. So where if there is a profit and the loss, bank account, two bank accounts, this is a columnar form. It takes more time that to discuss one just at the same problem that working note what we done. I continued with the accounting form in the columnar form. So we've taken into consideration the nominal value of the debenture, interest, and the cost, and the profit or loss we made from the investment account that we discussed about the journal entry. That is the seller point of view. That's in the books of seller. In the books of seller. So these are the things. Just to conclude, this particular concept, you're little bit you have to give more time. It's very interesting, but you have to think both interest, cum interest, and the ex interest. A loss in a summary way. In case of a ex interest, you know that one that dividend declaration sheet is prepared. The name of the shareholders who are eligible for the getting the dividend is called as a ex interest or ex dividend. Cum dividend, where they just company has announced the name of the shareholders are mentioned there. That's why price is higher in case of a cum dividend, and in case of a ex interest, it is ex dividend. It is lesser. Price is lower. So ex dividend, where the dividend declaration sheet is prepared by the company, where they are eligible for the name of the holder which is there in the sheet is eligible for the dividend. Yes, this is interest and the dividend. Whatever the within the time frame, I think I given the justice. I don't know. Shri Hari sir, madam has
It's fine, sir. Fine, sir. It's good.
Just
thank you very much.
Once again, I'll say thank to the institution for providing me opportunity, and my good friend Shri Hari sir. I can't say no, even though I'm getting the phone call from the register revaluation result we have to announce today, but I can't say no to the Shri Hari sir. Thank you for providing opportunity, Shri Hari sir.
Thank you, sir. Sure.
Thank
so
you.
You did a very good presentation, actually, what you have made. So, on behalf of SSMRV College and on my own behalf, actually, I'm thanking you, sir. So, just a minute, sir. Actually, the vote of thanks, Mr. Professor Sharmana is going to make.
Just ask the students how.
Sure, sir.
How
Sure, sir.
much,
I'll get you the feedback.
Give
Definitely.
feedback, sir, please.
Sure, sir. Sure.
Thank you, sir.
Thank you, madam. You can take up. Sarthi, madam.
Thank you for your knowledgeable session, sir. You have enlightened us with investment accounting. It was a brief session with problem solutions also. Thank you so much, sir. I will hand over it to Saravana, sir, to offer vote of thanks.
Hello. Good afternoon, sir. It is a very good session. It is very useful to all the students and faculty member. And before I propose vote of thanks, there's any queries, questions from student side, please ask me or sir.
My sir, just a minute. If there is any questions,
Students,
please you can take it up.
there is any questions, queries, please ask. Sir, either you can text or you can ask.
ನಮ್ಮ ಶ್ರೀಹರಿ ಸರ್ ಮತ್ತೆ ಅನಿಲ್ ಸರ್ ಇರ್ಬೇಕಾರೆ ಅವರು ರಿಟರ್ನ್ ದ ಬುಕ್ ಓನ್ಲಿ.
No question?
ಸೊ ನೋ ಕ್ವಶನ್ ಅಂದ್ರೆ ಏನು ಅರ್ಥ ಆಗಿಲ್ಲ ಅಂತ.
ಎಲ್ಲ ಸರ್ ಎಲ್ಲ ಅರ್ಥ ಆಗಿದೆ ಅದಕ್ಕೆ.
ಓಕೆ ಸರ್.
Okay, fine. Sir given conclusion in investment accounting. It is very useful session, sir. It is very useful to student as well as all the faculty members. On behalf of SSMRV College, I am personally thankful to you, sir. And those who are organized this event for that support, Dr. S. Anil Kumar sir, Dr. Nagaraj sir, Sherry sir, Bharti madam, Nandini madam, and Shalini madam. I am thankful to them. And personally, once again, I am thankful to today's resource person, Dr. Mahesh sir. Thank you so much, sir.
Thank you, sir. Thank you.
Thank you. Thank you. Thank you very much, Mahesh sir.
Thank you, sir. Thank you, sir. Namaste, sir. Namaste.
Namaste, sir.